Thank you very much for that introduction. I see why you need that boost juice now. There's quite a bit there. Ladies and gentlemen, a bit of a heavy heart. I'm not sure I'll be back next year, not because of anything untoward, but this is an Explorers Conference. This time next year, we hope to be in development. Our pre-fee shows 100,000 ounce per annum gold producer here in WA. All-in sustaining cost about $11.50 an ounce. Gold price today touched 2,400. So to help you out, if you've had a bit too much lunch, 100,000 times by about 12.50, that's about 125 million a year in EBITDA, and that's why we're pushing for production, and what I'd like to talk to you today about. So Warrawoona is a consolidation story. It was mined in 1895. We brought together about 7 transactions to pull this area together. Started with a resource of just under 400,000 ounces in inferred, and within a year and a half, we tripled that to 1.25 million ounces and completed that pre-fees middle of last year. We're now knee-deep in a feasibility study, which will be out later this year. Permitting's on track. We've started finance discussions, and that's why I say we will be developing a mine next year. As I mentioned, we've tripled the resource, 1.25 million ounces. That's the basis for the pre-fees. The reserve at the moment, just over 400,000 ounces. And that's part of the feasibility, is to obviously increase that reserve to increase mine life. Also later this year, which I'll talk in more detail on, we'll start kicking off regional exploration for the first real time, and we're pretty excited about the upside there. Very simple capital structure. I think the main things to note here, just over $8 million in cash and listed investments, so well funded to take us through to that final investment decision. Major shareholder, Alkane Resources, have been making all the headlines for the right reasons recently. Great to have on board. They're a producer in New South Wales, so to tap into their expertise and maybe their bank balance eventually is also very handy. With the team, the gold development space has had a rocky road, but if it's done properly, as Goldfields and Gold Road have showed, you can add a lot of value for shareholders. And that's certainly what we intend to do. Our team's been involved with building just under 10 projects worldwide. We've got GMs of large WA gold producers. Experienced CFO and Richard Hill's just joined us. So although slightly silver around the edges and maybe occasionally grumpy, you do need that experience to get you through this next stage, and we think we tick all those boxes. Okay, there we go. So where are we? Just out of Marble Bar in the Pilbara, obviously better known for iron ore, but the infrastructure up in this part of the world is absolutely sensational. We're a 2-hour drive on bitumen roads outside of Port Hedland. We've got a bitumen airstrip in town, great pub, which is probably essential up there considering the temperatures we get. But we've also got things like LNG access via trucks. Woodside, very kindly down at Karratha, have put in a truck loading facility. That obviously puts our power costs down and helps us with the economies that we're looking at out at Warrawoona. If we zoom in on our tenement holding, just over 780 square kilometres in the East Pilbara, and we've really only touched on 5 square kilometres of this at Klondike. The 2 big pink circles there are granites, and the gold in the East Pilbara generally sits around those granites. So once we put a mill at Klondike in the centre there, in that centre of the figure of 8, that hub and spoke model really opens up for us, and we see huge opportunity to become the dominant player out in the East Pilbara. If we zoom in on Klondike itself and have a look what it looks like and touch and feel it a bit, so that greenstone package has been sandwiched between those granites and has been compressed into these ridge lines. The ore body is outcropping along there. So what you're seeing here is the ore body outcropping, no cover, so it helps enormously with economics and strip ratio at the start. And what you've got to imagine is that turning into a big 2-kilometre long open pit. So a very simple start to the operation. Beneath that open pit, the deposit's open. It's a steep deposit, ideally suited to underground mining as well. But we're looking at widths in the 15 to 20 metres wide within that pit, so we're getting that economy of scale, which is very important in keeping the costs down. The last resource we put out was January 2019, and in the open pit we had 930,000 ounces of which 670,000 ounces is in the indicated. The drilling we've done in the last year is really about de-risking. So we'll see some of that convert to measured. We'll see some more indicated compared to the inferred, and that's to add that mine life. We feel we've got enough resource, we need more mine life, and that's what that drilling targeted. And beneath that, we've obviously got the underground resource. So how do we exploit that? This central part where it's indicated, we've got that 2 kilometre long open pit. We've got a very standard decline, sub-level open stope, no fill, very sort of bulk and cheap form of not mining beneath there. And these are just on the 2 main shears of Klondike and St George. So that decline will go down between those 2 shear zones, and it means we can pop off either side to pick up the ore as and where we please. Again, a very simple and compact site. So the plant sits just outside the blast radius, so 500 metres from the pit, and the decline exits near it. Very standard West Australian gold plant, crush, grind, gravity, leach, and gold bars being flown out in a hurry at 2,400 an ounce. Topography is in our favour here. Although the engineers scratched their head a bit and it wasn't just a flat piece of dirt like they used to in Kalgoorlie, it means things like tails dams. We can put in a valley fill style dam. That means the embankment's very small. That saves a lot of capital cost, and there's various other benefits that come with that. If we talk about that met a little more, and I say it's a very standard WA gold plant, if you have a look, at the moment, the pre-fee says primary crush and sag. We might look at adding some flexibility in the bankable to treat more of that hub and spoke model, but in general, it will be some form of crush grind. A coarse grind at that, relatively low bond work index, so low power, that means low cost, high gravity component, which is good, very good life of mine recoveries, leaches incredibly well with very low cyanide consumption. And with that LNG I talked about earlier and these benefits, we're talking a very low processing cost of $15 a tonne, which means at about 0.25 grams a tonne, you're starting to make money. So metric-wise, let's summarise that. We talked about just under 100 million in CapEx. There is working capital on top of that. We will be reducing that in the bankable. It's currently sitting at around 30 million. We want to bring that down to around 10 by delaying the underground a little bit and focusing on that pit, but we don't see other costs changing much. NPV, again, I'll help you with your maths. At 2,000 an ounce, we've put out numbers. Obviously at 2,400, what does that mean? Well, if you take the differential, it's just a straight line. It's basically $30 million post-tax on the NPV per $100 an ounce. So you need to times that by 4, 120, plus your 168, you're just under $300 million NPV post-tax and around the 400 million pre-tax at current gold price. And that's what gets us really excited about this project at the moment. So where do we go from here for the next year? How do we add value for shareholders? Well, obviously there's that instant kicker with the gold price just continuing to climb, which is fantastic. We will put out the bankable study later this year. We're looking at increasing mine life as part of that study. We're well entrenched in that permitting process, and we'd expect to see those completed before the end of the year. And on top of that, we'll be doing some regional exploration. So starting from the last point back, if we look at the regional side, we've done some soil samples. We know there's a couple of higher grade satellite deposits that we've done some drilling on, but we'll be flying detailed aeromag and radiometrics in May. The regional geos are chomping at the bit to get that. Once they've got that, they'll be out on the ground mapping and starting to plan out some drilling across these tenements, because we're very confident you don't get 1 million ounces in a deposit and nothing else around it. If we zoom in just on Klondike itself, there's multiple shears and trends that we need to follow up. We really only have looked at Klondike and St George, and that shows the resource in the red there. We only named the Lone Hand trend about 2 weeks ago. We knew about it. It didn't even have a name, but until a structural geologist came up and said, this is something you really need to look at. I'm pretty excited about this. We decided we better call it the A name and not just the no name trend, because that's not exactly exciting. What else are we doing? So the resource is defined down to just over 200 metres in depth. So in a couple of months, we're going to drop in a couple of deep holes down to around the 500 metres in depth, so double the current base of the resource, with some daughter holes coming off to, we believe, show that the structure and the gold persists at depth, and that we've got 1.15 million ounces in Klondike alone to that 200, 250 metres depth. If we can prove that that continues to 500 metres, we feel we don't need to drill it, but it shows that there is really great upside on mine life as we move into the underground. Why target production? It seems to occasionally, it's a bit of a dirty word to want to move into production. We are very keen to move into production. Our share price has basically remained flat during one of the greatest gold runs we've seen lately. Producers have been flying, and I think that's what it says is, when you can tap into that gold price by being in production, the rewards will come. So gold price up 30%, returns up 300%, share price flat. Slightly frustrating, but we know that it will change. It's just a matter of when. We're ticking the boxes as we work through, and at some point that will change. And that's what we're slowly working our way through in the next 10 to 12 months. So if we look at that timeline, we've got the deeps drilling coming up in Q2, some more measured drilling, again, de-risking to make sure when we press a button we know exactly what we're doing. That'll be Q3. Aeromag in Q2 as well. Permitting's ongoing, as I say, and we certainly believe that by Q4 we'll have all the permits in place. Resource upgrade, we've got two, firstly open pit and then underground, and that's more about confidence levels, not so much size. DFS by the end of the year, project financing in parallel with that. Early works later this year, we bought a camp recently, and we'll start to move that up in the next couple of weeks. And that lets us commence construction by this time next year. So in summary, great gold price, a project that we're moving as rapidly as we can to development, but at the same time keeping the risk to a minimum to ensure we make good money for shareholders and good returns for shareholders. It's open at depth. We're only just scratching the surface on the regional upside. A team that's been there and done it before, and very keen to get stuck in and do it again. We're at the booth, both Richard and I today, so if you have any questions, feel free to pop around. Thanks very much.